We've seen a massive sell-off across three pharma names in particular. GlaxoSmithKline shares are down more than 20% this week, the bulk of that selling coming in just the last 2 days. Haleon, the brand new spinoff from GSK, down more than 13%, and Sanofi down more than 13% as well. Now, this, as I mentioned, was a drug that was created by GSK, but after coming off patent, it became distributed, manufactured, sold from multiple drug makers. So it's an incredibly complicated case. Now, what has happened? Well, back in 2019, the FDA launched an investigation into the drug around safety concerns, given that there were fears that the drug contained a probable carcinogen called NDMA. As a result, we then saw manufacturers voluntarily pull the drug from shelves, and then by 2020, the FDA, along with the European Medicines Agency, officially requested that the drug be recalled. Now, these companies are facing more than 2,000 cases in the United States, and the first case is going to be held before a court on August 22nd. So we are now approaching the first point at which we will get some insight potentially into how the court system is going to view these cases. Now, the companies have come out this week defending themselves. Here's a little look at what we've heard. GSK has said that the overwhelming weight of the scientific evidence supports the conclusion that there is no increased risk associated with use of the drug. Sanofi has come out saying that the science does not support the plaintiff's claims in this litigation. Sanofi remains confident in its defenses. And Haleon has come out saying that Haleon is not a party to any of the Zantac claims. Haleon never marketed Zantac in any form in the U.S. Haleon is not primarily liable for any OTC or prescription claims. Now, this gets at just how complicated this case is. Because the patent for the drug expired in the late 90s, there are so many players involved. There were also multiple owners of the OTC rights in the United States. The GSK and Sanofi are the main ones to watch here, and that is perhaps why we're seeing such a strong share price reaction in those names. But Jeff and Karen, we are potentially looking at billions of dollars in charges here, and many investors fear that this could turn into something like we've seen with Bayer and Monsanto.
Yeah, that's fascinating that you draw that comparison with Bayer and Monsanto here, because we are trying to, and I think most investors are trying to establish a model around which they can understand the fundamental valuation on these businesses going forward. Just remind us, I mean, what kind of potential liabilities then could we be talking about globally? You've talked about very significant numbers here, but what would it take and how long would it take for the courts to process that kind of prosecution?
Well, Jeff, let me start with your last question first in terms of what the timeline is we're looking at. As I mentioned, August 22nd is the first case. The key bellwether cases stateside will begin kicking off in early 2023. But like we've seen with litigation like this before, class action lawsuits, the number of cases is very likely to build. We're looking at more than 2,000 right now. But in the case of Bayer Monsanto, they had about 130,000 cases when all was said and done. So this could be a major overhang for months, if not years to come. In terms of the fines at stake here, it's still a major open question, and a lot will depend on the strength that the court sees from any link between NMDA and cancer and any evidence of wrongdoing. Previous drug settlements have ranged from $30,000 to $270,000 per claimant based on evidence of wrongdoing. That's a range being floated by several analysts on the street. Deutsche Bank saying that liability could be in the billions magnitude, but again, a huge amount of uncertainty.
Turn here in sentiment, Julianna, because we've had numbers out from the sector, and just recently Sanofi, one of the companies in the pharma space that was doing particularly well, thriving on the back of earnings. But this is clearly quite a different story as we now talk about potential liabilities.
Well, Karen, you've absolutely hit the nail on the head in terms of how investors are feeling right now, not only with Sanofi, but especially with GSK and Haleon. These were real bright points for investors. There was a lot of excitement around this spin-off, a lot of investors who were excited about the prospects at GSK now that they've got the spin-off out the door. And of course, GSK has faced a huge number of challenges over the years. Emma Walmsley coming under pressure from Elliott, the activist investor. Now Haleon coming to market, this consumer health unit, which has already garnered a huge amount of interest from a number of companies, and investors were excited about the prospects here. And now just within a matter of weeks, everything seems to have blown up. Now, in terms of what analysts are saying, a lot of them have come out in defense of all three of these companies, saying that this market reaction is overdone. It's a knee-jerk reaction, and there's still a huge amount of value in these companies. But in terms of what investors are thinking and saying and feeling, my conversations over the last couple of days, they are in pain, and based on what they've seen in other cases like this, they just want to get out, and maybe they'll reconsider later.